The CPI came out today and it's 7.1%. Now, this shook a lot of people. We thought it may even be higher than what they were expecting, that 7.3. It came in at 7.1, and man, did the markets go bananas today. Let's get right into our story of the day, ladies and gentlemen. We're going to be checking out this article right here. Now, we're going to go straight to the U.S. Bureau of Labor Statistics. We're going to read it right from the horse's mouth, okay? This is the economic news release. It says here, the consumer price index for all urban consumers rose 0.1% in November. 0.1%. So this is why they were so happy on a seasonally adjusted basis, after increasing 0.4% in October. Because imagine we went up 0.4, 0.4, 0.4, 0.4 every single month. It would be complete mayhem, right? If we were in that situation. It's saying we were happy at 0.1 because they were expecting 0.3%. But the U.S. Bureau of Labor Statistics reported that today it was 7.1, seasonally adjusted. But take a look at this. The index for shelter was by far the largest contributor of all the monthly items that increased. Of course, ladies and gentlemen, what have we been saying on this channel all along is that shelter is a lagging thing. It's not liquid. When you raise the rates, it takes 12 to 18 months for those feelings to be felt in real estate, because it takes time for people to run out their leases and go find another property. It takes time, right? Bitcoin happens instantly. But when it comes to homes, very illiquid. So these prices change very, very slowly. Let's get back into this. Like we always say, shelter is going very, very high, and the food index increased 0.5% over the month. So even though they're celebrating 0.1%, right, we still have housing being very bad, food being very bad. How can you take this? Remember what we always say is the things that you need, housing, shelter, etc., those things, food, those prices go up. The things you want are the prices that go down, like a Patek Philippe watch, okay? Or Bugatti or something. Prices of things that you would like to have, those prices go down. The things you need, those prices will always go up. All right, so homes and food are in trouble. Of course, the overall index is at 7.1%. If you go and look at this chart that's below, this is all the items. We see up, up, up. Food is up 0.5, 0.5, 0.5. These are where we're danger. But why did we have numbers lower this month than we were expecting? If we take a look right here on energy, negative 2%, 1%, right? It's the energy that dragged that rate down, because you guys have seen at the pumps, right, that the price is a little bit lower. Even transportation systems down here is lower, which actually pushes used car prices down. Commodities, less food and energy. I don't even know why they put that there, but it's all the fuel. The leading reason why is that fuel prices were coming down. So this is important for us to know. Let's go check out one of the articles. This is over from CNBC. So consumer prices rose less than expected, up 7.1% from a year ago. Here it is right here that it came up 0.1%, but the estimates were 0.3%. So they are celebrating in the streets. Ticker day parade, okay? That is 7.1%. Inflation adjusted average hourly earnings for workers rose 0.5%. Now, you have to also take this into account. We've heard good old Jay Powell always say that if you're giving those raises to your employees, you're not looking out for the economy. Don't give your employees raises, because we need the standard of living for everyone to go down. We need to reduce spending. And so they don't want you paying your employees any more money to stop everybody from spending that's out there, which is a huge argument for central bank digital currencies. That's another argument for another day. But he doesn't want you to raise those rates. And so as they're raising their wages, man, it's going against what Jay Powell is trying to do. He's going to be picking on that as well. And nobody should be celebrating losing 7.1% purchasing power in the past year. But check this out. Economists surveyed were expecting that 0.3, and it came in at 0.1, which you would think is what? Good? Bad? 7.1 is bad, you guys. Okay. But they're celebrating that it's coming down slightly. Look at this. Stocks initially roared higher following the report, with futures tied to the Dow Jones average up 800 points before. This is the dystopian world that we're living in right now, where we're celebrating 7.1%. As if it's come out of nowhere, right? It's not that the government actually printed money, right? It's like me slapping a kid in the face and then bringing them a wet towel saying, sorry, I don't know where that came from. I mean, it's the governments that do that money printing, right? So it's not a shock of where this comes from, but we should be appalled that we have lost 7% tax in addition to the high taxes that we already pay. And people are celebrating 7.1. Why are they celebrating? Because they say if it is coming down faster than what we expect, then the central bank could stop raising rates and stop hurting us as badly, hopefully faster. But we cannot mince words. They have said consistently, probably the most consistent I've ever seen between federal chairs or central bank people, we will stick at it until the job is done. Stick at it until we hit 2%. So they seem intent on keeping those rates higher for longer than anyone expected. So if we head back into this, I want you to look at what this 12-month change looks like over time. This is all items. Okay, we're not going to break down individual pieces, but let's just look at the years 02 to 06. Do you see how it's bouncing around between 2 and 4%? Of course, 2008, 9, things were bad. And there was what they called deflation. Prices were dropping. How much? 1%, 2%, not really bad. Okay, so if we look at between the end of the last recession and now, interest rates were always between this 1 and 2%, which is what the governments really like. They like inflation because it's a tax on you. So whether you call it 2% inflation or 2% tax, it does the same thing for you. It reduces the quality of your life by 2% every single year. And 2%, losing that 2% every year is not quite enough that people complain about losing that percentage of their quality of life. They're just kept being told, work harder, do Uber on the weekend, right? So they don't usually complain about that 2% tax, 2% inflation. They just take it. So the governments can do that. But the only reason that we could have 2% inflation is because we found a way to export our inflation. Whoa, David, that's a big concept. What are you talking about? Listen, guys, I want you to imagine this. Imagine you had a little kid and the little kid drew on a picture, on a piece of paper, a sun or something like that. And he gives it to you very, very proud. Here you go, Dad, paper and ink on it. And we'd say it's precious to us, right? But it's not precious to anybody else. But what happens if somebody went and drilled on the other side of the world and pumped all this gas out and filled a boat full and captains and all the workers to bring it here to Canada or to the United States, and all their hard work and all their material goods that are there, right? We take that and we take it. So obviously we're winning, and we have their kid draw on a nice sun picture on a piece of paper and hand them that paper as payment. You would say, well, we made off like bandits like that, right? In Canada, United States, Europe, this is how we export our inflation. Is we're willing to put a little bit of ink on a little bit of paper. That's what we do. And if we take a little bit of ink and spread it around on a little piece of paper, we can call this $1. We can create billions of them with just an email. And we give them this little ink on a paper, and they will give us all of their stuff. So we've been able to use the rest of the world's cheap commodities, cheap labor, to subsidize the quality of life in North America. And this is where the BRICS nations is coming into a lot of problems. We're not going to be having this anymore as labor prices in China has shot up. So as they have, and BRICS are going to separate, you're seeing over the past 2 years here, this result up to 9% inflation is because of what? Money printing. This is money printing. We haven't even seen the effects yet of what could happen if the world splits into two, like the BRICS nations leaving. BRICS meaning Brazil, Russia, India, China, South Africa. And the big things that are changing is Saudi Arabia wanting to accept the digital yuan for gold. That could shake up the entire world, and it looks like they're going to do that. So as the U.S. loses their place, we will not have a place where we can export our inflation. Same as Europe, same as Canada. We will have to onshore all of our manufacturing. So if we look at something like this, we have to be able to look at ourselves reasonably and say to ourselves, what are we going to do for the future? Remember, inflation is nothing you can do about except if you out earn inflation. That's why you have to really pay attention to that. Start learning how you can make more money, more streams of income in this world as we reshore all the manufacturing and the world reorganizes itself, just like after it did after 1945. We have to pay attention to that. And we should expect inflation to continue a lot longer than we expected. It's same as we got to expect interest rates to be higher than expected, higher than I have expected, and a lot longer than we expected. If we go back to the 40s or the 70s and look at those periods where we had a lot of things that rhymed with what we're going through today, we're now seeing a time where we could see high inflation for several years, 4 or 5 years. But a lot is to be seen, right? I don't have a crystal ball, but this is what my grandma always says, is just to hope for the best, pray for the rest. I think that's what she said. Hope for the best, pray for the rest. That's what I wish for all of you guys. Just we have to always prepare ourselves for the worst and hope for the best, right? So that's why I always tell you caution and financial education. I just got another book called Only the Paranoid Survive. Can't wait to read it. I'm going to get back to you guys on that when I go through that book. I know a lot about it, but I'm just excited to read it word for word, and we'll do a full copy on that. Anyway, I love you guys. I hope you have a great night. Be careful out there. Thanks so much for sticking around. If you like that video, you might like this one and maybe something like that.